Hello and welcome. The experts at My Tax Accountant have put this discussion together, and today we're talking all about inheritance tax for civil partners right here in the UK. We're going to show you how your unique status can really help protect your assets and, most importantly, give you and your loved ones some real peace of mind.
So, here's what we've got lined up for you. We'll kick things off with the basics of inheritance tax. Then we'll get into the really good stuff, the huge advantage you have as civil partners. After that, we'll look at how you can combine your allowances, navigate some of the tricky rules, and then, to wrap it all up, we'll give you a super practical checklist and point you in the right direction for getting professional help.
All right, first up, a discussion on IHT and understanding the basics. Before we jump into all the figures and percentages, let's just take a moment to set the scene and talk about why this is so important for you and your partner.
And this really hits home, doesn't it? I mean, just picture it. You've spent years building a life together, sharing absolutely everything. The very last thing you'd want is for your loved ones to be hit with a massive, unexpected tax bill. That's why planning is so crucial. It's your best defense.
So what exactly is this thing we're talking about? Inheritance tax, or IHT for short, is basically a tax on someone's estate when they pass away. And by estate, we just mean all their stuff. Property, money, possessions, the whole lot.
And it's not a small number either. The standard rate is a pretty hefty 40%. Now, that's not on the whole estate, but on the part that's over a certain tax-free limit.
Okay, Section 2, the civil partner advantage. And this is all about the power of the spouse exemption. Now, that 40% figure might sound a bit scary, but hold on, because it is not the whole story. Your status as civil partners gives you a massive advantage, a really powerful tool against IHT.
And just look at the difference this makes. It is absolutely staggering. If you're an unmarried couple, an $800,000 estate could get hit with a tax bill of almost $200,000. But as civil partners, thanks to what's called the spouse or civil partner exemption, that very same estate can be passed to your partner with zero tax to pay. Nothing. It is, without a doubt, the single biggest protection you have.
All right, Section 3, combining your allowances. This is where we build your tax-free threshold. That exemption we just talked about, that's just the start. The real magic in your planning comes when you start combining your individual tax-free allowances.
Okay, so everyone in the UK gets a standard tax-free allowance. You might hear it called the nil-rate band. And for the 2025/26 tax year, that amount is £325,000.
But here's the really clever part. Any of that £325,000 that the first partner doesn't use when they pass away can be transferred to the surviving partner. Think about it. Since assets often pass to the survivor tax-free anyway, you can essentially double your allowance, taking it up to a whopping £650,000.
And we're not done yet. On top of that, there's another allowance called the residence nil-rate band. This one is worth an extra £175,000, and it applies if you're passing your main home on to your kids or grandkids.
And guess what? The same brilliant rule applies here too. Just like the standard band, this residence allowance is also transferable between you and your civil partner.
So, let's do the math. When you add everything together, 2 standard allowances plus 2 residence allowances, a civil couple can potentially pass on up to £1 million completely 100% free of inheritance tax. That is a huge deal.
Okay, Section 4. Gifts, reliefs, and rules. Let's look at some key strategies and potential pitfalls. So beyond those big allowances, there are some other really important things to think about, especially the rules around giving gifts during your lifetime and some other specific reliefs.
A really key one to get your head around is the 7-year rule for large gifts. Basically, if you give away a large chunk of money or an asset, and then you live for at least 7 years after that, that gift becomes totally tax-free. If you pass away before the 7 years are up, the tax due on it gradually reduces over time. They call that taper relief.
Now, this table is super helpful because it shows that all these allowances and reliefs come with rules you absolutely have to follow. You know, little mistakes, like forgetting to fill in the right form to claim a transferred allowance, or not setting up your will correctly, can completely unravel all your careful planning. The devil really is in the detail here.
Section 5, your planning checklist. These are actionable steps you can take right now. Okay, so how do you actually put all of this into practice? Let's walk through a really simple, practical checklist of things you can do. Honestly, following these steps is the bedrock of a solid plan. It all starts with your will. Make sure it's up to date.
Then, get a clear picture of what your estate is actually worth and keep good records of any gifts you make. All of this gives you a clear roadmap and, frankly, a whole lot of peace of mind.
All right, our final section, getting professional help and your next step with My Tax Accountant. We've covered the main framework here, but let's be real. Every couple's financial situation is different, so the most logical next step is to get advice that's tailored just for you.
And that's where professional guidance comes in. It's really all about making sure you're being as efficient as possible and getting that peace of mind. An expert can make sure you're not leaving any money on the table and will build a plan that uses every single relief available for your specific circumstances.
So if you're ready to take that next step, you can get in touch directly with the team at My Tax Accountant. You can reach them on WhatsApp or by phone at 07854-255-375, or you can just drop them an email. They specialize in creating personalized estate plans specifically for civil partners.
So we'll leave you with this final thought. Now that you understand the framework, what is the single most important step you can take to protect your family's future? Because really, understanding all this is the first part, but it's taking that next step, taking action, that truly secures the future for the people you care about the most.